Australian food giant Goodman Fielder is the recipient of a $1.27 billion bid from Singapore-based food manufacturer which owns 10% of its stock. I'm joined by John Dewey from The Australian. John, what are they looking for, this company, in terms of taking over Goodman Fielder?
Well, the joint venture partners are in food already. Wilmar owns CSR Sugar, Manison Foods and other assets, and I think it sees it's an undervalued asset. It's a very opportunistic bid.
Very much so, because they had a earnings downgrade on April the 2nd, and that helped push shares down by about 20%. But actually, this 65 cents per share bid is about the same as Goodman's been trading for the last 3 months or so, right?
Well, there's a little pop on Thursday, and that might excite the regulator, or it should excite the regulator. But the stock's been trading down. To tell the truth, a lot of analysts think it's come another downgrade. It's really in a dreadful position right now because it's trying to cut costs out while it's got the supermarkets on one end, which are controlling their prices, and then it's got really high commodity prices in dairy and in grains, and so its costs are high and it can't recoup the costs in the soup because the supermarkets are keeping the lid on it.
So this is a cheap bid at 65 cents?
Well, I think it's probably considered cheap, but I don't think we're going to get much more. Certainly this is considered the first offer, and I think, like another 10 cent would easily do it, maybe less than that.
So the premium that we're at is what, about 15%?
It's 18% to the close on Thursday, but that's, as I say, that we had a little bounce then. The stock traded at 77 cents about this time last year, so I think there's upside in the bid, but thrown against that, competing bids probably aren't around. Wilmar is interesting because it's owned partly by ADM, which of course was the rejected bidder for Grain Corp. So there's a lot of stories in this one.
Now, we talked a lot about the idea that the Australian food sector had a lot of potential, particularly going into Asia, but Goodman Fielder really is a domestic-based company making, breads and margarines and the like for local Australian retailers like Coles and Woolies, right?
It is. It's a great branded company, and Chris Delaney, the chief executive, has done a great job there and is continuing to try to get some sort of value out of the company. But he was left with some difficult assets. This was a company owned by New Zealand billionaire Graham Hart, and before he put it back on the public market, he took a lot of the best assets either with him or sold them elsewhere, most notably Uncle Toby's. And so it's sort of the stuff that Graham Hart couldn't do anything with.
So do you think this is the case of these Singapore companies looking to buy Goodman to help them export more into Asia, or are they just really doing a domestic play?
Well, I think this is probably a domestic play, but I think this is, they want to own all ends of the food chain, and this is a good one to do.
So do you see any other bidders maybe coming in over the top?
Well, who knows? It's very early in that set. Goodman, of course, has got its New Zealand dairy assets up for sale. They earn about $55 million, so based on current multiples, could get 550 thereabouts. So it's a private equity play, and so maybe we might get something there.
What about Wesfarmers? They've got a bit of spare cash around.
You will see Wesfarmers' name mentioned on every possible bid between now and Kingdom Come. It's that time of year because Wesfarmers obviously got a lot of cash and everyone's looking for it to bid.
But they wouldn't be for Goodman Fielder, would they? Sure, they're the ones who've been squeezing them down into very low margins.
I doubt it very much.
John Dewey, thanks very much.
Thank you.